New Business News Market Talk. I'm with Stan Harley, who is editor of the Harley Market Letter. We've got some earnings that have just come in. Hewlett-Packard first quarter fully diluted 92 cents a share, up from 86 cents. The first call estimate for Hewlett-Packard was 83, so the 92 cents beating the first call estimate by 9 cents. So Hewlett-Packard beat estimates. First quarter revenue is $11.9 billion versus $11.8 billion. Dell Computer, and this is the one many were watching, 31 cents on a fully diluted basis in the fourth quarter compared to 20 cents. I think the estimate was 32, so it may have missed it by a penny for Dell Computer, but they have also set a 2-for-1 stock split, which may counter the disappointing earnings. And Applied Materials came in on an operating basis of 11 cents, down from 52 cents, but the estimate was 6 cents, so the 11 cents beat the 6 cents by a nickel. So we'll see how Applied Materials does. So earnings pouring in here, some good, some bad, but the markets will react in whatever direction, Stan, as we saw with IBM. Better than expected earnings, maybe flat hardware sales took a little bit of hardware out of IBM, but in any case.
Corporate America is doing well, and that's supportive, I think, the fundamental side, and I do the technical side, but they go hand in hand here, and that's supportive of higher prices, I believe.
Let's take a look at your cycle chart here once again. Now, this is the 19-week cycle, as you're suggesting,
yes,
with your Gann and cycle work, that the market was coming in
yes,
on schedule. And
yes, this next chart is a very important one. This is the 19-week cycle in the stock market. And you can see with quite regularity, every 19 plus or minus 3 weeks, we tend to get important cycle lows. And this is the half-span companion of the last cycle chart I showed, which averaged about 9 months. What's very important here, in that 9-month cycle, you get two 19-week cycles. The first one tends to expand slightly, and the second phase, phase B, tends to contract slightly. So the 19-week cycle is a composite average, but realistically, the first phase tends to last about 21 to 22 weeks. The second phase tends to contract to about 16 to 17 weeks. We are right now, today, exactly 19 weeks from the October 8th low. So you're going to see the internals of the market, i.e. the new lows and the advanced decline structure and so forth, appearing bad, because that's why because we're approaching a cycle low. That's precisely what they're supposed to do. I think we've got couple of more weeks of backing and filling here, as this next chart will show, and then we're going to resolve ourselves to the upside.
Okay, let's see which next chart. We're kind of skipping out of order here, but okay,
well, no,
this one here.
The next chart is the S&P.
Right.
This is a daily chart, and this is a chart I've shown before. This is a 27-day cycle.
Okay.
Now, within each 9-month cycle, I have found there are 7 27-day cycles. The first half is comprised of 4, and the second half is generally comprised of 3. So look for a major 19-week cycle low at the 4th 27-day cycle, and again at the 7th one. The 4th one is coming due on March the 3rd, plus or minus 3 trading days. I believe we will see the 19-week cycle bottom here on or about March 3rd, plus or minus about 2 or 3 trading days. That's
okay,
about 2
so
weeks
you'd be
from right now.
Yeah, you'd be a buyer in a couple of weeks.
Yes, yes.
So right now, what are you?
Right now, I think we're going to do some modest backing and filling.
No, are you invested or buy signal?
Oh, I'm still invested. I haven't sold a dog on that.
Okay, so you're still in a buy signal.
Yes, yes, indeed. Yes.
Okay. All right, we have any more charts here? We're taking a look at turning points, right?
Yes.
Or you already mentioned that?
Well, we can go to the next chart here, and we can take a look at the March 3rd time period. We've got some important Fibonacci relationships around the March 3rd time period. Most importantly, look at this October 8th low, plus 144 calendar days, falls on March the 1st. A couple of other very important ones, the January 8th high, plus 55 calendar days, falls on March 4th. The December 8th high, plus 89, March 7th. The February 1st high, plus 34, falls on March the 7th. So right in the midpoint of this clustering is March 3rd. So I suspect this fact, coupled with the fact we've got some cycles due in that time period, will be the next important low in the stock market.
All right. And we'll be back and talk more with you and see some more charts. Stan Harley's my guest on Market Talk.
What stocks were moving? What stocks were shaking? What did the bond market do? What was the latest corporate news? We'll tell you at 1:30 on our Market Wrap-Up right here, weekdays.